Good morning, everyone. How we doing? Hey, Raj, Moran, Ian, how you guys? Hey, Bradir, good to have you back. Hey, George. Okay, well, we're still in distribution. So generally, markets are distributing or accumulating. And a lot of traders have difficulty because they're looking for a breakout. This is a really common problem. So what you can do is very quickly determine whether the market's in a distribution, an accumulation, or trend, right? So you want to trade this differently than this and this, right? And one of the biggest things is managing your expectations. So if you know the market's going back and forth in a distribution, right? We're taking this cheap stuff in the blue box, we're selling it up here. Until we break these lows, we'll still distribute, which means for people who don't know what distribution means, it means sales, right? It means selling. So our job is to figure out what kind of market it is, how to trade it, where we can manage our risk, make some money without blowing ourselves up, right? So knowing that we're in distribution does a couple of things. Number one, hey Tim, how you doing? It keeps us grounded. We know that we are inside yesterday's range and we are inside yesterday's cost basis. So it's business as usual, right? It's the same business that was going on yesterday and was going on Friday is happening today. So you can use the same balance zone. Overnight inventory was long. It is now corrected a bit. So what we want to do, and this is where the 1 minute chart really comes in handy because then we can just take trades back and forth based on the cost basis areas. Okay. This way we know where we are, we know what we have to do, and there'll be no FOMO, all that nonsense. Right? So I did up new balance zones. This time I used the distribution up here as a balance, and this is 2 times discount to that distribution. And you could see that it was pretty close. The lows it came close to 77.70 here. So let's see what happens when London opens. So the overnight point of control is up here, which means we took all the cheap stuff from yesterday, sold it here, now we put it on sale. We're back to yesterday's cost basis, right? Which was right here. Good morning, Think. Welcome to our stream at Trading Syndicate. Good to have you with us. Oh, it looks like it's going to be a hot one in Liverpool today. What's up, Ian? You guys have a holiday? Cool. Stealths, how are you doing? It's a bit slow. No, it's not pre-recorded. If it was, I'd still be asleep, Jeremiah. This is live. And welcome to the stream. Hey, Sergio, how are you? Alrighty. Let's see if we can string a trade together here. So we got some front running before VWAP. Yeah, I'm starting to get a bit better with this cold. I still sound horrible, so you'll have to excuse me. What we're doing is we're cleaning out the trapped long inventory above 83. That's coming in. The shorts are getting to cover. Wholesales are going to build a little position. We're going to try and move this cost basis from 85 down. Right, we're going to try and do this. Absorb that inventory so we can go back and sell it. When London opens in 6 minutes, if we don't take out 77.70 or the overnight low, then we'll just go back and forth here and then back up to sell it. Really simple. So let's see what we're dealing with here. Any of you guys have any decent trades this morning in the room? Or you're all just kind of waking up, getting going? So for people who are new to the stream, I'm JJ. This is the trading syndicate.org where we teach regular people how to make money just using common sense and how the business works. No indicators, no patterns, no nothing. I've been in the business 34 years and taken about 200 companies public, so we use that knowledge along with some very strict trading rules to only do business at certain times when it's advantageous for us, and then the rest of the time we just chill, right? We don't chase price. We don't subscribe to things like FOMO or revenge trading, all that stuff. That's for amateurs, right? We teach you how to trade like a professional trader. So you wait for your setup. When your setup presents itself, you take the setup, and we practice that over and over and over again. No bookworm. Can we interpret accumulation as buying wholesale stock? Exactly. Exactly. Accumulation is like we're loading the trucks at the warehouse, right? And then trend is taking the truck to the store. And then distribution is selling that cheap product at high prices to anybody who will buy it. Ah, it's okay, Doc. Don't worry. You'll get used to it. Yeah, we know trading for retail traders is incredibly, oh, how shall I say, scammy. There are a lot of people out there trying to sell you indicators and books and patterns and like, have you read this book on candlesticks? It's like, no, I'll wait till the movie comes out. No, candles are simple, right? The top of the candles are where the sellers initiate. The bottom of the candles, see like right here? Check this out. This is where the bid is. One, two, three candles with the same bottom. The sellers stop there and they try to raise the price. When they do raise the price, you know they're going to step in here, here, here. So all we do is we watch that offer, the red line. See how when we come down here, now if there's competition at 73, the sellers will lower price into the 72s and the 71s. But if they see buyers there, you can see you can have four candles with the exact same bottom. So the software will try and raise price and get those buyers to pay more. If that fails, they'll lower price to get rid of their product. Really simple stuff, right? Then we use common sense like, is this a trade? Is there a trade here? With these candles so small, no follow through, inventory overhead, is this a place where you take a trade? No, it's not, right? So we use a lot of common sense in this room, right? And it's just doing good business. Most people don't view trading as a business because they've never worked in the business. I grew up in the business, so I know that there is nothing else in markets other than the distribution of inventory, right? The market is, it's like a bakery. Every morning we bake the donuts and then we try and sell them. When we can't sell them, we put them on sale. And that goes over and over again. Investment bankers create product, institutional salesmen sell it, and the traders deliver the product to the client. All of this is automated now. Well, except the investment banking side. So what we try to do is we try to make decent business decisions. We like to buy at an edge, and we like to short at an edge. An edge means basically when traders talk about an edge, the simple English translation of an edge is where it's a good spot to do business, where I get the best deal, right? So if my cost basis was up here between 83 and 89, and this is 2 times discount, if I'm buying down here, that's where I get the best deal. So if I'm buying 71, 72, I put my stop at 70 and then I sell some at 75, that's good business. Right here, for us, if you are long, where would your stop be, right? Say you bought 74. Come on, guys in the room, wake up. Where would you stop be? I'm drawing a line. Anyone? There you go. There you go. Thanks, Marcus. London opens, can't get any lower. Nice, Moran. Nice. There, that's exactly it. 74 to 76. Nice. Well done. So every time we take a trade, these guys took the trade, even though it was slow, they took the trade against the London Open. Hi, James. My strategy, my strategy is I trade inventory and cost basis. So if you're new here, what we do is we wait for a good deal, take the trade, put our risk in place where it's not good business. So if you were long 74, your stop would be here under 73, and you'd be selling the 76s and the 77s. Does that make sense? So my strategy is to trade an inside day from the edges of the day. Do you understand what that means? You can learn this real simple. Come to our trading room. It's called tradingsyndicate.org. I'll do a little promotion here. We're giving away 10 accounts for Take Profit Trader. And basically what we do is I'll teach you how to use the 1 minute candle chart to make money, right? So for example, had you bought 74 here, right? Say you bought 74, 72 stop, and you didn't sell 76, right? Yeah, so your entry would be like 74, 74 quarter, and then your stop, Sergio, would be at the bottom where the business doesn't make sense. Now let me explain that, okay? So why are you buying 74, right? You're buying 74 because they don't need to sell it under 73. So I'm acquiring inventory here. My stop is here because if somebody offers it at 72, then the inventory I own here is mispriced. I got to get rid of it. Make sense? So the business reason for the trade is to buy 74 and sell 76. If somebody comes and puts it on sale under 73, then that business reason is no longer valid and we're out of the trade. So your risk is very little compared to your reward. For those of you who are into the whole R&R type thing, right? When we take a trade, it's based on structure. What tools do I use? You use your brain and the common sense that God gave you, and you do good business. So, James, if you can draw a straight line and if you can pay attention and do what you're told, I promise you I can make you profitable. How do you like them apples? No tools, no indicators, nothing. I have VWAP on the screen because everybody uses it for institutional trading. So you know if you're long 74 and you get up into the 70, 78s, you know you're going to be selling because they're going to be sell orders there, right? So my whole thing, James, is I teach no bullshit candles, right? The top of the candles are where the sellers start to initiate. So if you see the tops of the candles going lower, that means get out of your long. And if you're short, that works. When the tops of the candles are going higher, that means the sellers are raising price, right? So the reason I know this is because for 30 years I was a seller. I'm the guy who sells the stock for the insiders. When a company goes public and people have hundreds of millions of shares, I'm the executing trader who works for them, who helps get them to turn that 100 million shares into $800 million. So I know a little bit about distribution and sales because when you're selling and somebody else starts to compete with you, you have to lower your price. So the sellers were here, they moved down here, then they moved it all the way here. They saw buyers, they raised price, right? Yeah, exactly. The thing is, Sergio, now this trade, right? I told you it was slow and choppy here. And this reaction that we got here was a decent one, but we very well could have broken and gone down to 70, right? The platform's called Sierra Chart, but you can use any platform you want. Like I said, if you can draw a straight line and if you can pay attention, I can make you profitable, right? So in our room and in my coaching program, I have traders who are just starting, who don't know anything about markets, and my retail guys are making about $80,000 to $100,000 a month, and my institutional guys make, tens of millions a month, right? But we all start out at the same place. We all start out trying to make 50 to $100 a month and keep it, right? So everything I teach is practical, right? The backgrounds to the colors are real simple. The blue is a cost basis. The red is 2 times discount, and this weird ugly blue color is 4 times discount. So you know where you're doing business, right? For example, if this is your cost basis, this is 2 times profit, this is 2 times discount. So now you know where your inventory is priced. Markets are all about inventory and cost basis. You can do this on any platform. Like I say, if you can draw a straight line, if you can draw a box on a 1 minute candle chart, I can teach you. You don't need any software. You don't need to know common stock from livestock. I will teach you how to be profitable just using simple, time-honored business practices that have been around for thousands of years. What I do, and I don't mean to sound weird, but what I do is I expose the dirty secret of markets because I'm an insider. Okay. And that is that for decades, the trading industry tries to confuse you so they can take your money, right? That's why you'll notice a lot of these indicators don't work. Yeah, it's a market, right, James? So you make the donuts, right? You make the donuts at 5 a.m., then you take them and you put them in the market at 9. And you sell them from 9 to like 2, 3 in the afternoon, and then about 3 or 4 in the afternoon, guess what happens? You run out of customers, so you got to start putting them on sale, right? And then the night market is when you take the stale donuts and you go to the bar, you go outside the bar and sell them to drunk people at 4 times the price, right? It's just a market. And all this is a sales chart, right? This here is just a sales chart. It's telling you that we had sales, now we're in discount. Yeah, real simple, right? Since it's slow, let me show you how it's done, right? That's all we're doing. We're doing the same thing every day. Here, I'll show you. So if you wanted to go and use this, you see this sideways action here? This is a cost basis. There was a liquidation, and then you go sideways, and then you go up to sell. That's all we do. That's all you do. So what we do is we show you how to find a nice cost basis. And what that means is you go and you find a low and a high, and when you look below that low, you go right back to that high. See what I'm doing? At first it seems random, but it's not. So you look for a low and a high, and when you look below that low, boom, you go right back to that high. It tells you where the sellers are, and it tells you where they stop selling. So that's your cost basis, right? So for volume profile traders, I'll show you. You'll see this big chunk of volume. That is a cost basis. That is what we call, that's your position. So we take that, double it, and double it. So double it to the top is profit, double it to the bottom is discount. Really simple stuff. And then we train you to only take trades from the edges where you get the best discount on the donut, right? So we never used charts when we were trading because we made markets, right? So if I control all the supply of a stock because my clients own it all, then I can move the price accordingly when buying comes in, or I can put the price down if there's not enough buying and I need to offer the stock lower to bring in buyers, right? That's what they're doing right now, right? So we're watching this 77, damn, there's a lot of sevens. 77.70. We're watching this level right here. And my favorite trade, James, is when we do what we call the look below and fail. We go from one zone to the other, pop back up, you go long, you put your stop here, and you sell. Markets are rotational. So we teach you a few simple mechanics and business reasons when to do business, when not to do business. So we have traders who, like my best retail guy who did 1 million last year, he'll literally out of a 20-day trading cycle, he'll have maybe 1 or 2 drawdowns. And he usually averages 4 or 5 grand a day. Sometimes he does 20, 30,000 in a day. But if he has a losing day, he loses like $1,000. So first we teach people how not to lose money, and then we build good basic discipline and smart business decisions. I like to call it trade with the smart money. And this way you know when to do business, when to sit out, and when to get out of bad trades. We train you to do that so it's automatically present like a habit, right? If you teach people good habits, it works. Right? You have to have a valid business reason to take a trade. Every trade is a business transaction. There has to be a reason for the transaction. Otherwise, there's no reason to take the trade and put money out. You could see that there's a seller right there at 75 where I drew that white line. Simple stuff, right? So you know that there are sellers at 75. So had you bought 72, you'd be selling 74, 74 and a half, right? Just common sense. Why would you hold the trade? Another thing we do in our room is we teach you how to scalp because you need to learn how to trade quickly. And that's going to be really, really necessary this fall because I'm going to make another prediction. This fall is going to be really hard for you guys. So you better get your skill up. Right? I told you when this year began that this year would be challenging, and it has been very challenging for retail traders. Right? So you want to use this summer to really build your skill because you're going to need it in the fall. You're going to need it big time. As we go into the last quarter of this year, things are going to get hairy and it's not going to be easy. So you're going to have to up your skill level and up your discipline. Exactly. We are in a wartime market, which means this market is really nervous. It's really finicky. If you're doing business at the wrong time in this market, oh my goodness, it'll be disastrous, right? Last week, how many people blew up their accounts shorting that move up? You know, I'd bet you out of 100 traders, probably 20 to 30 blew up their accounts. Maybe 1% knew how to make money, and the rest hopefully were smart enough to sit it out. So we'll teach you how to trade a wartime market. We'll teach you how to trade around volatility, and we'll keep you from losing money. So if you're tired of blowing up accounts, if you're tired of getting sucked into all this psycho babble about revenge trading and all that stuff, if you just want to learn how to make money and not complicate your life, that's what we teach, right? Smart business. Like right now, see how it's chopping between 72 and 74? There's no opportunity there, right? There's no follow through. So that means wait till later to look for opportunity, right? There's no point being in trades just for the sake of being in trades. right? Unless there's a specific business reason why you go into a trade, don't go into one. Let's explore those reasons. There's only two reasons to go into a trade. One is there's no supply, so you become a supplier so you can sell it higher. Number two, there's too much supply, so you short and you sell with the suppliers until they stop selling. That's all there is in trading. It's not rocket science. They've made it rocket science, and you can get sucked into all that stuff, but basically, it's about knowing where the selling is and where the selling stops. Like right now, there were bids at 72. Let's see if it bids 72. Right? Because if the sellers get desperate, they will lower price down to 71. If they see buyers at 72, they will raise their price and try and get them to pay 73, 73 quarter, half, or. That's what chop is. Yeah, you had one good trade. You got lucky on this one there. You go, Ian. Leave it alone now. Right? Isn't it dinner time in Australia? You're gonna hate this one. Go throw another shrimp on the Barbie, right? Right? You had a good trade. Now don't mess with it. Don't screw with it. Every time you make some money in this business, right? Take it and run away with it like a thief in the night. Don't hang around and wait for them to take it back, right? Until you get really skilled, every time you take a win, take it and go squirrel that money away. Get it out of your brokerage account so you can't get your paws on it because your ego will say, "Oh, you're really smart. Oh my God, you're such a good trader, right? You made $300. Let's make it 800." And then you lose the 300. And then you lose another 300. Sound familiar? It's because you don't know when to do business, when not to do business. That's all it is, right? Don't trade for free. Get paid to do your work and take your paycheck and be responsible with it, right? So when you get paid, you get those guys who get paid and they go to a casino and they lose their rent. Don't be that schmuck, okay? And we'll help you. We'll help you manage all of that stuff, you know, and we reduce it to simple stuff. So no matter if you are completely brand new, we'll teach you, or some people we deal with and work with, they've been trading for 10 years, they haven't made any money because they've got a ton of bad habits and they're trading on a whole bunch of bad information, right? So sometimes it takes a while to clean out the rat's nest of information they have in their head, but we do make them profitable. So I basically trade ranges. Yeah, I'm a trader, James. I like a discount. You know what I mean? So I'm not sure what you do for a living, but say you were buying and selling cars, right? There's no money in buying a car at retail and then marking it up, right? You want to buy the car at wholesale and then mark up the price, right? That's just how business works. So markets are there to distribute inventory. The chart you're looking at is just a sales chart. It's telling you how sales are going. Is the product being sold at a premium or is it the product being sold at a discount? I don't want to buy it at a premium. I want to buy it at a discount. See? Everything has to make sense business wise. This is how it works in the real world. In the retail trading world, people have indicators and all that stuff. All of that stuff is sort of like for fantasy, right? But in the real finance world, it's accumulation and distribution. I'm looking for consolidations and taking discounts. I teach you how to use the 1 minute chart because you're not going to get into too much trouble with a 1 minute chart, right? If you're not consistently profitable, you shouldn't be trading anything bigger than a 1 minute time frame. Let's see if we can get any lower than I want to take out the 77.70. Hey, the overnight POC moved lower. Nobody said anything. On this side, this is what we call our market profile chart. It's like a fancy half-hour candle chart. And it just shows you where the stops are and where the inventory is very, very quickly, right? It's okay, Ian. You know what? Don't worry about it. You'll never make that mistake again, right? Don't worry. And just be thankful it wasn't 6 grand. That was crazy. That guy actually didn't even remember sitting down and trading away $6,000. He had no recollection of it in the morning. Moral of that story is don't trade under the influence of sleeping pills. Yeah. The right chart is what we call a market profile chart. It's like taking a half-hour candle chart and opening it up so you can see what's inside. When do I use the DOM? To put orders in. I do my order entry on the DOM. That's what it's supposed to be there for. You're not supposed to trade off the DOM. The DOM is to actually put my orders in. That's all. Seller at 72, bids at 71. Man, it's slow. Boy, oh boy. I've got a pretty bad cold, folks, on YouTube, so you'll have to forgive the way I sound. Make some weird sounds. My nose is all stuffed up, so apologies for that. The trade I'm waiting for, James, is to look below 77.70 and then come back up over it. So going from that red color to that weird blue and then coming back up into red. That means the sell orders are done. Right now it's still selling off. It's going slow. What do we have a news day today? Is margin raised, Raj? I didn't even look. I'll throw our room in there. I'm JJ. I'm vwaptrader1 on X. No, no, because you could put a limit order here, right? And then it could just take you right out. So the better thing to do is to wait till it goes down and comes back up over it. Because then you know the sell orders underneath 70 are completed. And then your risk is better. You have a place to put your risk. Tomorrow at Thursday we have CPI? Okay. Hey Juan, what's going on? You're a little late, brother. Only got a couple of minutes left. Now remember, we had sellers up here before. Let's see if they sell into it here or if they front run it. Even when it's slow, you can learn something. You just sit and watch the offer, right? The offer is everything. This is a TPO chart. Yeah. But don't pay too much attention to this. You should be focusing on this, my friend. This is where the money is. The TPO chart, this is a map of the city. And then if you want to do business here, this is the map of the neighborhood. See what I mean? The detail is in the candle chart. TPO or market profile charts give you 3 or 4 pieces of information you need. Then they give you a bunch of information you don't need, right? Yeah, this is a daily. This is daily. These are half-hour bars, right? But you don't want to spend too much time looking at that. Where you're going to make your money, my friend, is here. Okay? You're going to make your money here. This is where you're going to make your money. Because if you understand where the sellers are and you're long, you know where to get out of your trade. If you know where the sellers are and you're short, you know that you can short the market as long as the sellers keep reducing price, right? Right. So TPO charts are great. That's how I learned retail trading. But there's only 3 things that you need from a TPO chart: inventory, poor highs and lows, and single prints. I just answered your question. So I use TPOs for market structure. Is there a poor high or a poor low? Poor high means selling competition. Poor low means buying competition. Simple. It also tells me where the inventory is priced very quickly. And then the concept of single prints tell me where longs are trapped and shorts are trapped. But I'll have to get into that later. You'll have to come into the room, James. I have about 400 videos on YouTube. Happy if you check them out. And if you have any questions, like you do, message me at any time. I'm vwaptrader1 on X, or come join us at tradingsyndicate.org. All right, folks, have a great morning, evening, wherever you are. We will see you at 9:15 for the next session before the New York Open. Thanks, everyone. Bye for now.